Wang is the Chief Emerging Markets and China Strategist at Alpine Macro, joining us with her take on things. Lovely to have you on the show, Yang. Thanks very much, Yan, rather. Thanks very much for taking out the time. I do want to get your sense in, Emily raised the point about the Trump 2.0 era and the tariff threat for China. Now, amid what the market is doing right now, how do you think the macro environment in China is shaping up?
Well, if we have a Trump 2.0, we have a massive tariffs on Chinese exports, then clearly that will be a major headwind for the Chinese economy. The economy is already struggling. Exports have significantly outperformed the domestic sector in the past couple of years. So if the export sector is going to get hit hard, then the economy will suffer more. So I think if that does happen, then there will be just a very strong case for the Chinese government, for Beijing to really step up easing measures to boost domestic demand.
Right, and if that's the case, then how do you think China would retaliate? Would there be counter tariffs?
I think there's really very little China can do to retaliate. If we think back from 2017, 2018, in Trump's first term, I don't think, China can do much to retaliate. The simple fact is China imports a lot less from the U.S. than China exports to the U.S. So if they really want to engage in the trade war, simply, I don't think China has the card. So I think the best they can do, actually, if I would advise them, I think the best would be to really try to embrace global trade, try to make China to be a more attractive destination for foreign businesses to do business with. So I think that would be the best counterattack. So if, another trade war, another tariff war, I think, China really cannot do much.
Yeah, and I know you just came back from a field trip to China. Talk to us about what you saw there. And I want to bring to your attention, we're looking at Meituan because yesterday the share surged 13%. We're continuing to add 2.5% in the early minutes here. This is showing strength of China's super app, their food delivery, of course, their bookings, car rentals and such. Mengniu Dairy was up 10%. Of course, these companies also announced share buybacks. But is there strength in the Chinese economy, in the Chinese consumer?
There is, I think we can feel like, my feeling back in China was there's clear as a kind of two-speed economy. You do have sectors that are very strong, very robust. But on the other hand, it's quite clear to see consumption is, at least according to my observation, consumption is visibly weaker than what I experienced in my previous trips. So I do think domestic growth situation is quite weak. There are bright spots, all the, the companies that you talked about, clearly they are, especially their stock prices have come down so much. So valuation has become so cheap. So I do think the market appears to be in this kind of broad bottoming process. But for the economy to do well, I do think Beijing needs to act a lot more aggressively. Otherwise, we can feel like if you look at Chinese credit numbers, all these kind of high-frequency indicators, they have been decelerating at a very alarming pace. So I think, China really needs to support the economy. If the economy is facing a demand side problem, but they are trying to support the supply side strength, that will just make the economy even more deflationary. So so I think a lot needs to be done, especially really if we have a trade war with the U.S. For the beginning of next year or the end of this year. I think the economy will struggle even more.